that, we start with today's market rally. So let's bring in Carson Group Chief Market Strategist Ryan Detrick and Evans May Wealth Managing Partner Brooke May. Great to have you both here with all the major averages higher by anywhere from 1 to 2.5%. Ryan, I'll start with you because we have the S&P. It looks like settling it out at 57.67, so up about 1.7, 1.8%. The Nasdaq up more than 2% here. Can this rally be believed?
Well, we think so. Thanks for having me on a green day. It's kind of rare here. You know, one of the things, Morgan, that we like about this, what have we seen the last couple months? A lot of selling on Fridays and a lot of selling on Mondays. This is 2 Mondays in a row now. Buyers stepped in. Friday's up 4 weeks in a row. The market's kind of telling us some things, hate to say this time is different, right? The 4 most dangerous words. But we're seeing strength around those days that were weak. And historically, you tend to see strength around weekends in bull markets. So we like that. Now, the big question, last comment here. Can it keep going? We think it can. I mean, the first half of March is usually quite weak. The end of February is weak. I know a lot of seasonal stuff is out there, but just the over-the-top negative sentiment. I know lots of guests have pointed these things out, but I'll tell you, the anecdotal sentiment, just people I have never heard from in years were reaching out to me a week or two ago saying, should I sell? Should I sell? When you have all the sellers exhaust themselves, like I think we just did on March 13th, which is usually when you bottom in March, we think this rally has some legs to it.
Interesting. I mean, just looking at the Dow right now, we just turned fractionally positive on the quarter and on the year now. Brooke, want to get your thoughts here. Are you as optimistic, dare I say, or constructive, especially given the fact that growthier names are really adding to this market rally right now? I mean, Tesla finishing up 10% today.
Yeah, we are optimistic. We have a year-end price target on the S&P 500 of 6,500. Which would be about a 13% gain from where we are today. And we think that's going to be earnings driven more so than multiple expansion. The trick is figuring out what earnings are going to be right now. We're at the mercy of guidance from companies, and it's a difficult environment for them to forecast. When the most recent CEO sentiment survey came out, there was optimism, more optimism than we've seen in quarters. However, they indicated that their biggest concern right now is geopolitical uncertainty. And, a lot of that's stemming from tariffs. So the sooner that we have more clarity, the better off we'll be and most likely dodge a recession.
So, Ryan, along those lines, how much of the down market that we saw recently was about the tariffs themselves? How much you think was about fears of slower growth and the uncertainty that still hangs over not only exactly which tariffs, when, how much, et cetera, but how responses will play out?
Yeah, John, I mean, a big part of it, I think, was the uncertainty over tariffs. Like we just said, the uncertainty policy indexes are about the second highest or highest they've ever been across the board. And you know what happens? Stocks tend to do a lot better when those uncertainties that high. Why? Because then you get a little certainty like what we just got. Okay, maybe the tariffs are a little more targeted. It's still kind of some bigger question marks and answers, but the market clearly liked that. But again, I'm a message of the markets type of investor. 2 Fridays ago, we had 90% of the stocks higher in the S&P 500. Last Monday, St. Patrick's Day, 90% of the stocks higher, 2 days in a row. We call that a buying thrust. 3 and 6 months later, you're talking like stocks have never been lower, right? So with some really strong returns. So to us, hate to say the bottom is in, but we think there's a good chance we bottom right at a 10% correction, middle of March, over the top negative sentiment. And now we're seeing the market tip its hand that the buyers are back in control.
All right, cross your fingers there, Brooke, which leads us to housing with earnings that we've got here in overtime today. With tariffs maybe off in some cases, are the home builders okay to buy into here? With the rate cut picture, though, still uncertain?
I think that it's still too soon. They are cheap. KB Home is trading at about 7 times forward earnings. However, if this is an entry point, you would need to be patient. We saw Lennar report last week, and they indicated that they think the housing market is going to be weak for the foreseeable future. The same will likely be true with KB Home. These builders have to give incentives for buyers, and that cuts into their profits, in addition to the uncertainty around what material costs might be and interest rates. So right now we're cautious on the home builders. We think there's better opportunities elsewhere.